Hey everyone, welcome back. Today, we're discussing an important update that could impact many families across the country. The Senate has now blocked a bipartisan bill that aimed to expand the child tax credit. This decision has significant implications, and we're going to break it all down so you understand what's happening and how it might affect you. Now, you might be wondering, why was this bill so important? Well, the child tax credit is a crucial benefit for many low-income families. It provides financial support that helps cover essential expenses, and the proposed expansion could have increased the credit for millions of families. This expansion would have been a big step towards reducing child poverty, offering a larger credit to families that currently don't receive the full benefit because their income is too low. Let's talk about what happened in the Senate. The bill needed 60 votes to advance but fell short with a 48-44 vote. This was expected by many, as it was brought up mainly to put a spotlight on the issue ahead of the November elections. Democrats hope to showcase their support for the child tax credit and put pressure on Republicans. However, some Senate Republicans were not on board, raising concerns about the legislation and wanting amendments. You see, this situation is part of a broader political strategy. Leading up to the elections, Democrats have been pushing several bills that resonate with voters, knowing that they might not pass due to opposition but still wanting to highlight their stance on key issues. This has included legislation on contraception and in vitro fertilization, among others. Interestingly, the Senate did pass a different piece of legislation aimed at protecting children online, showing that bipartisan efforts can still succeed on certain issues. But the child tax credit expansion didn't make it through, which brings us to the concerns raised by Republicans. Some argue that the bill could disincentivize work or allow undocumented immigrants to claim the credit. However, it's important to note that the bill maintained a minimum earnings threshold and required children to have Social Security numbers to qualify. Now, let's look at the specifics of what the expansion would have offered. The bill proposed a larger credit for low-income families in the first year, allowing them to claim more of the credit and increasing the maximum refundable credit for those who owe little or no income taxes. This change could have lifted 500,000 children out of poverty and improved the financial situation for millions more. Another key point was the adjustment for inflation starting in 2024. This would have increased the maximum credit per child from $2,000 to $2,100 by 2025. The expansion was set to be in effect for 3 tax years, from 2023 through 2025, providing some much-needed relief for many families. On the business side, the bill included provisions to restore several tax benefits from the 2017 Tax Cuts and Jobs Act. These benefits would have allowed businesses to immediately deduct the cost of U.S.-based research investments and machinery, which is crucial for small businesses and their growth. There was also relief for those affected by recent disasters and enhancements to the low-income housing tax credit, which could have added over 200,000 affordable housing units nationwide. Plus, the bill aimed to accelerate the deadline for filing backdated claims for the Employee Retention Tax Credit, a move estimated to save taxpayers over $78 billion. So, where does this leave us? The blocking of this bill means that the expansion of the child tax credit is on hold, at least for now. This decision has stirred a lot of discussions and will likely continue to be a significant issue as we approach the elections. And what can you do? Stay informed, stay engaged, and make your voice heard. Whether it's through voting, contacting your representatives, or discussing these issues with your community, your involvement matters. Thanks for tuning in today. Don't forget to like and subscribe for more updates and insights on important financial topics. See you next time.